What is up, internet? My name is Andrew, better known as Drew-ishus. I am sort of back. It's been a while since I posted any content. I promise I'll explain in just a few minutes. Today, though, I do want to let you know we're going to be talking about inside candles. We are talking about trading stuff. If you don't care about trading, you can stop unless you want to hear about the rescue dog that we're working on, our current project, which is what is causing me to be absent from recording and trading. I'll tell you a little bit here. Brief overview. We had this dog, kind of neighbors of my partner's family. The dog was not getting any attention. This was down in Oklahoma, and they did not have time for this poor dog. And he has basically been trapped in a small pen on the side of the house that he lived at, outside, sometimes without water, frequently some food, kind of left all on his own. And we went over and got to know him. He's sweet. He's smart. He is a feral beast. And so we talked them into giving their dog to us, and we are trying to rehab him. He is a year and a half old. He has all of the manners of a 3-month-old puppy, and he is extremely big and extremely strong and extremely opinionated. So we have been really busy. That's why I have not been around too much lately. I'm sure it'll be worth it. But in the meantime, I haven't been around too much, so I just wanted to get this video put together quickly. I got the chance to do a little bit of screening today. So what I thought we'd talk about today is why I love inside candles so much. So what we're going to do, I'm going to explain what inside candles are. I'm going to explain why I like them and what I'm looking for when I find them. And then you guys can start looking for them on your own if you're interested. And if not, if you follow any of my alerts on any of the Discords that I trade on, you'll start to understand why so many of them mention inside and outside candles. So let's jump in and take a look. I've got ES up here in the background. And for those of you that don't know, I use Thinkorswim. I have a special study on here. It is not one of the default studies. I do have this study linked on my website, drewsbasement.com. So if you would like this indicator for yourself, feel free to go and grab it. It is free. And here's what it does. It highlights inside candles and outside candles. They're not very hard to identify. This just makes sure that you don't miss them quite as easily. So what is the definition of an inside candle? An inside candle is a candle that completely fits inside of the high and low of a previous candle. Conversely, an outside candle is a candle that completely engulfs its previous candle, right? So the high and the low are above the high and the low of the previous candle. This indicator that I've got enabled right now shows outside candles as white, solid for a bear bar, and hollow for a bull bar. And it shows inside candles as gray, same thing, solid for sell bar and hollow for a buy bar. So what are we interested in these things for? What do they mean? Well, an inside bar and outside bars are both forms of consolidation. It represents market indecision, which means that buyers and sellers are having a discussion about where the price should go next. And they're not very far from each other. They're going up and down. And what we're hoping for and what we're looking for with this form of consolidation is buyers who are trapped inside of their position when it doesn't go the way that they're hoping. We want a lot of those buyers. That's why we're interested in this. And when we find a lot of those buyers that are trapped inside of a position that doesn't go the way that they're hoping, what are they going to do? Buyers that are managing their risk appropriately are going to set stop losses. And they typically set them, depending on who you are and how you do it. You could probably guess what my answer is going to be, right above or below the bar that they bought in. So if we look at ES, and I just kind of went back. I didn't grab any particular date. Looks like we're in January of 22 here. This bar right here, it's gray. That means it's an inside bar. And as you can see, it is completely inside of the high and the low of the previous candle. Now, interestingly, if we look at this candle here, this is a really interesting candle. Look at what happened here. It opened here. It tried to sell off, and then buyers said, hell no. And buyers pushed it all the way back up. And if you look at this candle right here, you can see that there was a little bit of selling pressure, and it was all buyers. So lots of buyers piled into this position right inside of this candle, this huge range candle here. Now, the next day, inside candle opens, we open up inside of range, and I'll bet a lot of those buyers are still in that position, right? They are hoping that this is going to go up or down. They have an opinion. They have a thesis. They're all thinking something. I don't care what they think. All I care about is whether we break the high or the low of the previous candle, right? So I'm looking for a break here to take a long entry, or I'm looking for a break here to take a short entry, with the idea that the stop losses that those traders have set there may start to trigger if we push further beyond it. Now, if we look at this particular candle here and the one that follows it, which is pretty interesting, you can see that this candle wicked up and broke the high of the parent candle and then got rejected, right? There was a lot of selling pressure that day. And even the day following that was a massive doji, right? So there's still a lot of indecision in the market here. Now, you could have taken a position here and you might have gotten stopped out, or if you had your stop loss set somewhere normal for playing an inside bar, what we'd be looking at is for an entry here at the break of this bar and a stop loss somewhere down here, right? We're saying essentially, hey, I'm going to give you this much room to be wrong. And if I'm not wrong, then let's see where this thing takes us. Now, in this case, we could have come down. We may have gotten faked out here. We may have taken an entry. If we didn't see this, if we saw this rejection happen quick enough, we may have decided not to take entry. If we had taken it, we might have gotten stopped out down here where this doji faked us out. But look at this move that occurs afterwards, right? Once this consolidation broke out and once we actually closed a candle above that wick, look at that move to the upside, right? Once the market decided that it was going above this range of consolidation, it made a decisive move. And if we look at other inside bars, we can see that this is a pretty common pattern, right? Inside bar, consolidation. Outside bar, more consolidation. Break of that bar, we got a nice move to the upside. Now, it didn't keep going, but if you're a day trader or a scalper, this is a great move, right? If we keep looking around, where's some more inside bars? Show me the gray bars. I see another inside bar here. We did not break the bottom there. Now they got another fakie here, right? Another candle or another wick that went down below, but it still ultimately rejected. And once the first candle for that parent candle broke, or once the first one closed above it, look at this move to the upside. Another inside candle, move to the upside. Another inside candle, break, move to the downside. This happens over and over again. Nothing is 100%. No strategy is 100%, but this is a high reliability setup. And it varies depending on where you're at in your trend, on what's going on with the market. You still need to be, you can't just play these blindly. But typically, if you watch my alerts, what I'll do is I'll say, hey, I'm looking at this one. There's an inside candle. There's good consolidation. Sometimes I'll only post one side or the other. Now, that could be because where the candle closed or where the parent candle or the inside candle closed, it has too far to go to get to do anything interesting, right? So the risk to reward's not there. So typically, I'll post an alert at the high and the low, and I'll put that directly inside of my alerts to say, and you can see this happens quite a bit inside of my alert format here, right? Outside, inside setup. Now, I think this is just a one directional, but that's a great example, right? If we look at INTC, we can go look at one that's actually going on that I just put in a little bit ago. This is for tomorrow, right? Here's an outside bar with an inside setup. I love the outside inside setup, and this is actually two outside bars, so it's an outside inside setup with good volume, right? So there's a lot of buyers in here and they're all consolidating right here. And if this thing, what I'm interested in, I'm not actually interested in playing this to the downside because it has so far to go to break the downside. If it goes down, cool, I'm not going to take an entry. I don't care. If it breaks here, we've got a small kind of hidden gap here, right? There's some wicks there, but there's not a lot of discussion going on in this area. And our next level of resistance is 27.8 or so, right? So if we break here at 26.8, I might be able to pick a couple of bucks up. And that's like a 15% move on this ticker, right? Maybe a little bit more than a 10% move. No, it'd be more like an 8% move. But an 8% move is huge, especially if you're playing options. So this is one that's actually on my watch list for this week. But that is the whole point of the inside candle. We are looking for consolidation. We're looking for trap buyers. We're looking for their stop losses to accelerate the move, contribute to the momentum of the play, and to potentially give us a very nice risk to reward entry that you can play on any time frame and really on any ticker, whether you like equities or options. I tend to play them on options. that's a personal choice. But it is important to note that these do work on any time frame. They're just more reliable, like most indicators or most patterns. They're more reliable on higher time frames. So my alerts typically happen on the 1 day and the 1 week. But when I'm trading intraday, I'm absolutely looking at the 5 minute, the 15 minute, the 1 hour, the 4 hour. If I see them there, I'm definitely looking to find out which way they go, because it still contributes to momentum and it still can give you a great trade. So I hope this is helpful. I hope it helps you understand why I like the inside setup so much. If you guys have questions, please drop them below. Otherwise, as usual, I'd appreciate a like. You can subscribe to the channel for my once a month video or whatever it is. I'm not making any money off of these things. I'm just trying to share some information, and I hope it helps. So, all right, y'all. I hope you have a great one. We'll talk to you soon. Skol.